Chintan Thakkar joins us, CFO with Info Edge. Mr. Thakkar, good morning. Thank you for joining us. What should we start with? I'll give you the options open. First, your core business, or what is the update on the investee companies?
Let's begin with core business, because operating in investee companies, either they are listed, so they are being covered independently, and I don't have much to add. When it comes to investee companies, they are now the large ones are already listed. The one which are not large, they are really still listen to really kind of talk more about it. But today's exciting stories is more about our core business.
We've gone through a year of great resignation. Great resignation means more job offers. Great resignation means more business for a platform like yours, which is Naukri. Can I say that this entire binge hiring, what we saw, whether it was in the IT sector or the startup sector or other sectors, that binge hiring is now behind us, or that is going to continue?
I think if I really extrapolate the trajectory, then I think it looks like that it's at least it is continuing, and I'm also kind of driven by more anecdotal examples of what I have seen. I was talking to my legal firms and tax consultants last few days, and I'm seeing that this trend still seems to be continuing. And also this is a season where you have all this performance management increments and all that. So I would think that this is the time when many employees are also sitting on fence, right? And the churn rate, if it is to go up, usually it is in Q1. Right? So at least for next 1 or 2 quarter, I would think that I think this trend continues. And in fact, now I see that the trend is actually increasing. In this segment, which were not there was not so much of hiring happening, which are not non-tech kind of hiring. And I think that also I'm seeing that I think that's kind of going up. So it was all over the last 4 quarters. It was led by IT, but now I'm seeing it that it is spread across various functions.
The company, Mr. Thakkar, has been making quite a few small acquisitions. So you've been very active on the inorganic growth path. Just walk us through what the plan is on this front. Are there a lot more acquisitions that have been lined up?
So look, if you look at some of those small acquisitions, I think the objective is not so much of growth, but it's also about the strategic gaps that we have in our product offering, and kind of building a very different new set of offerings and new narrative for our customers. Right? And if you see our past statements as well as the cash that we are holding on our balance sheet, obviously we look forward for growth, whether it's organic or inorganic, right? And if we need to use cash for that, or even for that matter, if it's a large acquisition and the currency of a stock, we are structured that if there are some opportunities, then we can absorb those opportunities. Not that we are in hurry to do anything, right? But we are a growth company, and we would look forward to growth coming from organic or inorganic sides.
Okay, just to get a sense on the investee companies, Policybazaar has got listed, Zomato has got listed. Like you said in the opening comments, that the ones which are big have already got listed, and the ones which are other investments are too small to get listed. So is it reasonable to assume that there is going to be no large other income component for at least 4-5 quarters now for InfoEdge?
Listing is not the only way in which the value creation gets expressed out on our kind of stakeholder stake. There are next rounds of funding happening in some of those private firms and all that. And when we look at some of those investments, we are pretty encouraged about how the growth is and how the operating metrics are, right? And also on how the interest in the next round of fundings are.
So, your ad spends, which continue to remain fairly high, I was just wondering if this trend is likely to continue for the rest of the year. As a percentage of your sales, where do you see your ad spends?
You'll have to see each business separately when we talk about the marketing spend. But as a general comment, first of all, last year the ad spends were very low because we were still kind of under the pandemic impact for a large part of the year. So the ad spends were reduced. So when you're looking at the growth, it's also because of the base effect that you have, right? Now, if you look at our largest business, recruitment business, there isn't much of an ad spend. Right? So I don't think that that's kind of something which and it may kind of go up, but in absolute amount, I don't think it's kind of really a big ticket item for us. 99acres and Jeevan Sathi are the one which consumes most of the marketing expenses. And there it's likely that we will continue because we are seeing some green shoots on the real estate search portal side. So we would want to capitalize on that, and it's a good time for us to invest in our brand for both Jeevansathi as well as 90. So so probably that strategy will continue.
Good morning, Mr. Thakkar. This is Nantara joining in on the conversation. Taking forward, I know you don't want to talk about the listed investee companies, but give us a sense of what's going on. We've all read, for example, how Tiger Global's portfolio is down. We've read about SoftBank. We've read about how Masa on the earnings day actually announced that SoftBank will reduce its number of investments worldwide by half. It might even reduce it to a quarter. What is InfoEdge's plan? You've also just done 3 funds along with Temasek.
Yeah, no, that's correct. So we still think that the startup ecosystem is very vibrant, right? And our philosophy of going very early in the startup ecosystem, and our track record and our success in finding good companies, good team, and investing behind them. I think that's something which we think when you look at the risk and return kind of an equation. I think that's that strategy is working out for us, and we'll continue in that. So even now, if you look at it, the overall size of the fund is not so great, given the entire ecosystem. But if you start going at an early stage, I think that's a reasonable fund size, and we still remain in a way excited about it because we still think on the ground when we look at all the opportunities that are there, right? I think that's something which is we think it's fabulous, and we'll continue to invest behind some great teams and great companies.
What we have seen with the InfoEdge share price, of course, there are a lot of global factors which are at play. Investors worldwide were pressing the sell button, especially when it came to consumer tech. But for InfoEdge, which has also been conservative with its cash deployment, the problem is your investee companies may not think so, right? Like Zomato has no problems not declaring a profit, but wants to keep investing cash to grow, do concerts, all kind of marketing things. At InfoEdge, how will things work differently? What's the larger message to the shareholders, to the analyst community?
For our core business, I think our message has been very consistent that we want to grow, but we want to grow profitably, and that's very evident when you look at our numbers and when you look at our kind of track record. That yes, we have taken a particular approach. Look, there are different paths to creation of value, right? And there are different situations in different verticals, right? So the verticals that we are in and the path that we have chosen is growing rapidly, but growing profitably as well. So we have been continuing on that path, and I think that's very evident when you